Today we're going to talk about one of the basic market maker templates with W and M top patterns and stop hunting. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacy Burke from Stacy Burke Trading. Last video we talked about the W and M patterns in relation to stop hunting on the intraday currency markets, and I'm sure it applies to any market. And the previous video we talked about the basic patterns with consolidation, stop hunt, and trend in a normal trend day type of trading session. So today we're going to go a little bit more in depth and talk about one of the basic market maker templates, and again talking about stop hunting and one of the things that I do to try and avoid getting caught into choppy or messy trades, and also ways to potentially identify when to have maybe the highest possibility trade setups and how those may present and how you can maybe go about setting up your charts and looking for these opportunities when they come. And then again talking about asymmetrical risk reward, where we're maybe looking at 5 or 10 or even greater times your risk in terms of the trade reward. So essentially we talked about, I don't trade during the Asia times. We've talked about how Asia tends to be the consolidation phase. If you go from the US close, later in the US session, the volatility tends to dry up. That's where we'll often see this pullback and then consolidation into the Asia Open. So that Asia range typically may start later into the US session. Now obviously not every single day is going to match up with these types of scenarios, but the general template, when you step back after we get these cycles, you'll see that you'll be able to draw these boxes and then start to specifically maybe identify more, again, which way the market is heading, but then also potentially what level you're in, level 1, level 2, level 3. And this also applies to the end of day charts with, maybe 3 weeks of rise or 3 months of rise, and then a 3-week pattern or a 3-push pattern, culminating in potentially a L3 level where we get choppy markets stopping out both sides of the markets before we may end up with a smaller M pattern and it rolls over, and then the same template flipped over heads the other way. So we're going to be talking about MAAW and WVVM. So what that means is that we may have this may be a Thursday, this could be a Thursday, Friday, this could be a Monday, Tuesday. We've talked about 80% of the time, Monday or Tuesday potentially may be a buying or selling extreme for the week. And if you go back and you start to track this with your end of day trading, especially if you're in a trending market, that's when you can really start to identify greater opportunities. The Canadian dollar is an example that just came out of a huge level 3 trading range and has virtually just dropped like a stone, 300-400 pips, and really has only given a small level 1 and level 2 scenarios. So very strongly US dollar losing a lot of strength against the Canadian dollar. So we see this pattern present, we'll see a consolidation, and at some point at the end of a level 3 trade we'll get a W pattern scenario. The market will, and that may be a V bottom, but we may see a W pattern. I'm talking sort of maybe using your 1-hour charts, but then going down to a 15-minute or a 5-minute once you have these 25 to 50 pip movements. Now every currency will have a different type of range. Now typically with the pound yen, those sorts of scenarios, I'll look for 25 to 50 pips of movement outside of the Asia range once Europe opens before I'll even consider taking a trade in those markets. That said, there are trend trades that do show up with railroad tracks. We talked about some candle confirmation patterns last day, hammers, railroad tracks, pin bars, different ways for you to confirm a re-entry into the trend at certain times of day. But ideally, when I get these stop hunt scenarios, they are golden opportunities because we'll get a W, a V, V, M to end the trend, and usually they'll be quite dramatic or noticeable V bottoms. An example of that is the euro last week. The payrolls announcement capitulated into a 50 pip movement to stop out the traders who were long from the previous night's US session, and then immediately within 2 or 3 candles on the 15-minute chart, it formed a W pattern on the 5-minute, went back up another 50 back to the 1400 level. And so savvy traders were able to trade. They may have traded payrolls right down to the 1350 gap, take profit, and then watch for that W formation on the way back up. And that market has now since moved up to what we may be seeing as a level 3. Time will tell. Yesterday we had stop hunting on both sides of the market, but we'll see how that continues. So level 3 sometimes can be a reversal, but in some cases, scenarios, it may actually be a continuation, which obviously price action will confirm that as the day unfolds. So one of the things I'll do with my Asia boxes with the pairs that I follow is, again, I wait for something that's moved 25 to 50 pips. I'll already know which direction I'm looking for that in. So for example, the market usually in level 1, there'll be enough traders trapped by the time it gets into level 3 that level 1 trades tend to move very quickly out of that box. And so what you don't want to be doing is counter trending a level 1 trade, because often when they move fast, that causes traders to be put into stress, reactionary. They may get trapped into some kind of movement again, which they think is back in line with the original drive down. But by that point, they've trapped enough traders that when they move that back quickly enough, they're basically flushing out all those stop loss orders or putting traders into major heat that haven't covered their losses on those trades. Then the market will go back into a consolidation phase, another V bottom drop, which again will probably stop hunt the level 1 breakout traders before it returns back. And sometimes these trades are easy to identify, and a lot of traders get back in participating because by that point they feel that the trend is back in place. They feel confident to enter it. And again, they'll often have opportunities for traders to re-enter that as they try to capture more people up into that level 3 scenario. So again, level 2. And again, 25 to 50 pips of movement outside of that Asia box. That's when I'll start to look for the W pattern or the M pattern in a down market. Now, often what we'll see up top in a level 3, like we have the Fed announcement tonight, last couple of months, the Fed has often culminated in a level 3 day because it stop hunts both sides and spikes out both markets before it may roll over in the other direction. Last night we saw this pattern show up on the pound yen. It's stop hunted, it went up 40 some pips, came back down. They stopped on at the bottom, they came back up, they formed a small M pattern about 2 hours and 3 hours into London, and then that market rolled down 100 pips for traders again. And then since this morning, we've seen the pound actually shoot up around 40 pips right off the open. So again, as the day unfolds, we'll either see that potentially come back into range and continue, or we'll see that give some sort of scenario, perhaps with a stop hunt up high, to stop hunt the traders that shorted that in London before that market rolls over. Again, you'll have to use your charts and your analysis to, that was on the pound, to align that with your other technical analysis in terms of how you assess the market. But the same scenario exists on the way down. I want to look for stop hunt patterns that come out of the Asia box, and sometimes those level 1 trades won't quite be the M pattern setup. They may be a half Batman or something that comes out, gives you a railroad tracks, and immediately reverses and heads off very quickly to the south side of that rectangle of the Asia box. And they're often the trades that do not come back. They move very quickly down to the next level to where they'll consolidate and form level 2. So again, you can see that stop hunt, pullback and consolidation pattern that we see almost day in and day out. Sometimes this may develop over a couple of days, but again, take your 1 hour charts, print off a bunch of them, start seeing if you can identify these levels where level 1 is, level 2, level 3, and then again looking at certain times a day as to whether or not those candle confirmation patterns we talked about in the other videos, again, railroad tracks, 3-bar railroad tracks, double pins, W patterns, pin bars on W patterns, railroad tracks on W or M patterns, the same sort of scenario, but those candle confirmation patterns, once the market has actually done its stop hunt, and then again identifying perhaps maybe one bar of entry that's going to give you maybe 3, 4, 5, or sometimes 10 to 1 on your risk reward. So hopefully you got some value from today's video, traders. Again, if you haven't done so, go to my homepage, download my 7-step daily routine for high performance traders. One of the ways that we talk about in the 7-step daily routine is accelerated learning, printing off your charts, drilling yourself, knowing that when you're in live time, where you're at with your charts. If you've narrowed that down to 1 or 2 trading opportunities, then being able to execute in live time where you're going to place your stops, how you're going to manage that trade, when you're going to go to break even, at what point would you take profits, how do you measure your profit targets, do you do some sort of asymmetrical range expansion to determine that, all the little things that are going to help you develop the skills in live time. So it's one thing understanding these patterns and saying, you know, there it is, there it is, there it is. But in live time, when they're wicking the candles around, the numbers are flashing, and you know they will do things that will confuse you in live time. You have to be able to be rock solid under pressure. Build your confidence and a winning mindset to master the markets in live time. And you do that through your daily rituals, your daily routines, the daily habits. The small things done daily are going to pay big dividends when you're in live time. So stay disciplined, stay focused, get the 7-step daily routine, create and bulletproof yourself with your own daily routine to master the markets. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.